This is Jeff Bauer. I'm doing scenario number 1, the age-old dilemma. This situation, a new staff accountant named Suzanne Stryker is asked to complete an audit procedure that is budgeted for 40 hours, and she's been working about 80 hours a week on it. This presents a problem because she wants to get everything done she needs to, but she knows that if she takes too much time, it's costing the firm money. Her senior accountant is working 40 hours a week and seems to get all of his work done, so she asks him how he does it, and he says he infers that you don't have to look at every single file, and that sampling and skimming is the best way to do it because the firm's already decided that it's a low-risk problem, so why should they put in that much work? She has some advice from some friends. She asked 4 friends what they would do if they were in her situation. One of her friends' name is Andrew, and he said that he would just do what the senior accountant suggests. He's been there a long time, knows what he's doing. There's not really risk, and that's what her job description is to sample work and see if it is very risky. Another friend named Boris said that she should just do her job as she was directed, do all the procedures, work the 80 hours, but once she hits the 40 budgeted, to not bill the rest of the time she spends on it. So basically eat the hours that she was spending on it. Her other friend Kathy said that she should just do her job, bill all the hours, and whatever happened, then it would just happen. She just did the best she could. Her last friend named Drew said that she should work and do all of the procedures in every step, and once she hit 40 hours, to go ask her audit manager what she should do if they would want her to finish that specific procedure, or if they would allot some more time for her, but it could cause a problem by going over her senior accountant's head. All of these advices or things that she could do have definite consequences. If she were to follow Andrew's advice, Suzanne could get herself and her firm in a lot of trouble by skipping the audit procedures if there was ever litigation or a problem with the audited financial statements. She could be held liable as well as the firm. They could cost their reputation and possibly bring down their downfall. If she followed Boris's advice by eating the hours, the next person, most likely her, would probably have to have the same problem again next year. Usually audits have the same people do the same audit procedures every year to make them more efficient, more profitable for the firm. And so if she were to postpone doing the actual work and not reporting that the budgeted hours were different than what she actually took, it could cause a problem for her in the future. The third option from Kathy's advice, the consequence would be that I could see only one downside, and that would be that the firm would maybe look down on her for not finishing her work on time, which is a definite possibility. Her last option or advice from Drew is that she could cause some workplace relationship strife and not being able to get along well with her coworkers. Her senior accountant might take it personally and make it really difficult for her at work, and also kind of ruin the trust there. It also could damage the relationship with the audit manager by going over the senior accountant's head and cause some problems that way. My recommendation would be a combination of actually both Kathy and Drew's advice. Since I've worked in public accounting a little bit, I've realized that with budgeted hours, it's important to stay close to that, but it's also important to ask your supervisor if you're doing everything you're supposed to correctly. If you're taking more time than you need to ask them, and they'll either allocate more time to you or say, pass it on to me, I can finish it for you. So I would say she should work 20 to 30 hours into the assigned tasks, and when she gets to about then, go ask the audit manager and the senior accountant at the same time. She feels like she's drowning, she's not getting it done like she needs to, and maybe ask for some advice or help. Or by doing this, the audit manager would have the ability to delegate more time to her from the budgeted hours, or assign it to someone else to be more effective. This also would be the most honest and beneficial to her and the firm in case there was ever a problem with that audited financial statement. In summary, Suzanne should have followed mostly Kathy's advice. Be honest in everything you do, have integrity. In the real world situation that this case was based on, she did take the shortcut. She took Andrew's advice. She was later called into a court of law for some litigation and admitted under oath that she did skip some steps, and it actually destroyed her company and her reputation as an accountant, which is a bad thing for all accountants. This situation is one that every accountant will face. The little experience that I've had in public accounting, I've already come across the situation where partners or managers expect you to get something done in a certain amount of time so that they can be profitable, and when it doesn't get done, you just need to be open and honest, and they will generally work with you and help you if you can't figure it out, and it works out to be the best. And that is case number one, scenario number one, the age-old dilemma.